Well, markets are broadly flat at midday after opening higher this morning. Now we're joined by Peter Cardillo, Chief Market Economist at Rockwell Global. Peter, why do we see this lack of direction in markets? Shouldn't investors be feeling a bit more emboldened after the budget deal that we've had?
Well, you know, next week is a big week, and of course everyone is waiting to hear what the Fed may or may not say. And I think what basically the market is doing this morning, it's basically just spinning its wheel and hovering around these support levels. That is the S&P 1775. And I kind of suspect, it's quite light volume, and so we're probably just going to spend the rest of the session trading in and out of the plus and minus column, and probably just close unchanged or maybe slightly higher.
Now, there's been some debate about how significant or not this budget deal is in terms of preventing future brinkmanship and taking markets to the edge every year. How do you interpret the significance of the deal?
Well, I think it's significant because it's the first time in a long time that finally gridlock seems to have been weakened in Washington, and I kind of suspect, the fact that the House approved it, that it'll be law, not in the distant future, and that simply means that gives the Fed some leadway here. One of the problems the Fed has had is, the difficulty stemming out of Washington. And now that we have a budget, I kind of suspect that the Fed is going to, really take a hard look at the economy and say, hey, things are getting better here. And the possibility of them announcing tapering next week, I think, is almost a done deal. If they don't announce tapering in December, they probably will announce it in January. So I think the markets also have adjusted to that, and I think the fact that the Fed may move on tapering is a good sign, because it indicates that the economy is improving and that we don't need help from the central banks anymore.
Now, given that we do expect the probability of tapering next week, would it be fair to say that it should be priced in and that there shouldn't be too much of a sharp pullback next week if it comes through?
No, I don't think so. I mean, I think we'll probably finish the year within this trading range, and I think there's a good possibility that we could begin to rally. And you have to also take into consideration next week that we have a lot of economic data, but I think that becomes secondary to the fact that if the Fed does upgrade its economic outlook, which I think they will, that's a given. And then, of course, we have options expirations next week. Now, I think part of that may have already taken place in the past 4 or 5 days when we saw the market actually come down. So I think from here to the end of the year, we'll probably stay within a trading range, and there's a possibility that we might even begin to tick up.
Okay, thank you, Peter. That was Peter Cardillo, Chief Market Economist with Rockwell Global, and I'm Jane Searle with TheStreet.